Hello, everyone, and welcome to today's session. So, today we are going to continue our chapter number 7. Remember, in last session, what we discussed? We discussed about chapter number 7, but we discussed about your EOM paragraph, your OM paragraph, KM paragraph. We have discussed various different paragraphs in the last session. We discussed like which paragraph will be applicable. We also discussed about the modifications, the type of modifications, qualified opinions, adverse opinion, disclaimer of opinion. So we discussed all those stuff in the last session. So do you have any doubt with respect to that? Any doubt? Anyone? Any doubt? Okay. If you have no doubt, this is what we discussed in last session. Now we will be continuing forward. We will be continuing forward first with SA 720 and then I will go to 710. Okay. First, I will go to SA 720. Okay. So can anyone tell me what is SA 720 about? Can anyone provide a brief like what SA 720 is about? If they have, if you have already gone through, ahead and if you have read the chapter from the study material. Yes. What is SA 720 about?
Sir, SA 720 is auditor's responsibility relating to other information.
Yes. Okay. And what is other information?
Other information is which is not uh, which is
Hmm.
uh,
What is
uh,
other information?
the information which is not
Included.
which is not included in the auditor's report anywhere else, and the separate disclosure is there in the auditor's report regarding other information.
Okay. Okay. So it is not included anywhere in the auditor's report, but the separate disclosure is there in the audit report, you're
यानी
saying.
और जैसे गोइंग कंसर्न के लिए हमारे पास सेपरेट पैराग्राफ होता है ना, इस तरीके से अदर इंफॉर्मेशन के लिए भी हमारे पास सेपरेट पैराग्राफ होता है ऑडिटर्स रिपोर्ट में.
Okay. Understood. Okay. Yes, Sumit, very good. Yes, Aaron, very good. So, basically, other information. What is other information? Other information is information which can be financial, which can be non-financial, but which is part of your annual return, which is not part of your audit report. So this information is part of your annual return, annual report of the company's annual report. But this is other than the financial statement and audit report.
Yes.
So other than financial statement and audit report is your other information. Clear? Okay, fine. Other than audit report and financial statement, it is your other information, okay, which could be included in the company's annual return. Which is the other kind of information which I should exclude from other information? Apart from the financial statement and audit report, what is the other type of information that I should not consider as the other information? Or in which scenarios this particular standard is not applicable? I'm saying in which scenarios this particular standard is not applicable. Come on, guys. In which scenario this particular standard will not be applicable? Anyone?
Sir,
Hmm.
in uh, in preliminary announcement of the financial information, and when the company issues prospectus for the for shares at that
Absolutely
time,
correct. Yes,
is
absolutely correct.
actually not applicable.
Preliminary announcement and securities offering, perfectly fine. Yes. Have you seen any preliminary announcement? Can anyone tell me like what is preliminary announcements?
Sir, IPO related?
Hmm?
IPO related?
Preliminary announcements.
Any business incorporate in business incorporation?
Securities offering document could be a IPO, FPO, and all that stuff, including prospectus. But what is preliminary announcement of financial information? Have you seen that ever?
First annual report of the company?
No.
Mm, preliminary announcement.
Anyone like preliminary announcement of financial information? What is that? No? Yes, Aaron. Yes, Sumit. But even, in case of, I would say that any information, let's say financial information, which is apart from your financial statement. For example, let's say, what companies does is company keeps a quarterly call where they explain that, okay, what is their status, what's their, profit margin and all that stuff in the status call. Okay, quarterly calls. It could be your year-end call also. Okay. Now, these calls and the information shared in these calls is nothing but your preliminary announcement of financial information. So I am announcing the financial information in advance before the issuance of financial statement. That is the preliminary announcement of financial information. Are you getting the point? So in these two scenarios, preliminary announcement of financial information, securities offering, including prospectus, this standard will not be applicable. So, financial, non-financial information included in the entity's report, annual report, an exception is other than the FS, audit report, preliminary announcement, security offering. Over there, this particular standard, this particular concept will not be applicable. Any doubt?
Clear, sir.
Sir, it is like the after the quarter results, the company is conducting its conference call. Are you referring to this?
Can you repeat your question again? I had some breakage of voice.
Sir, my query is that after the quarterly result, there will be a conference call. Are you referring to that?
Still, I'm not able to get your query. Can you just write it again? I'm not able to get the query. Your voice is breaking. Hello. Yeah. Can you write your query so that I can just read, and your voice was breaking. I was not able to get you. Con call after quarterly results. So, see, con call after quarterly result doesn't make any difference. See, for me, if the information is here in the financial statement, then in that case, that information, like if in the financial statement, that could become, uh, outside the purview of your other information, because that is a part of my financial statement. If there is any other information in your annual report, I can consider that other information as a, other. So the thing is that it has to be related with the financial, or non-financial things which are there in the financial statement. See, why we read the other information? We read the other information to identify the inconsistencies between the financial statement and the other information. We will see what is our responsibility, but as of now, understand here the target is to identify and understand the inconsistencies between these two, because they are presented together. So your financial statement later on will become part of your annual report, and they will be issued together. That's why we have to make sure that whenever an audit report or a financial audited financial statements are presented with some other information, that other information should be consistent with the financial information or financial statement that are being presented. Clear? Any doubt? Okay. So this was your other information. Okay, the definition of other information. Now, just I would request everyone to take the notes with me, because that will be really helpful for you guys before a day of exam. Okay, to revise this particular topic. Okay, so I request everyone to take the notes with me. Okay, now let's understand what is the auditor's responsibility with respect to other information. Now, why we are required to verify other information? What is the purpose of the auditor with respect to other information? Now, as I already discussed, that the auditor's responsibility is to consider whether is there any material inconsistency, okay, between the financial statement and other information. Because when your financial statement are presented with your annual report, it is your duty to understand, is there any difference in the amounts that are reported in your annual report versus the amounts that are reported in financial statements. I'll show you one example. It is not an example per se, which is a real example, but hypothetical example, so that we can understand with a much more clarity. See, this is our audit report that we discussed in the last session also. Independent auditors report, okay, on consolidated financial statement. And you have corresponding financial statements below. I just go to the corresponding financial statements. Okay. So this is the corresponding financial statement. Now, in this corresponding financial statement, you could have a lot of numbers, like fixed asset numbers, or in case of a P&L, you have a revenue numbers. Now, let's say, for example, this revenue, which is reported over here, this one, okay. If this particular revenue of 434,984.12, whatever number it is, let's say, for example, the total consolidated revenue is also reported somewhere else in your annual report. Let's search for it. Now, group revenue. Okay, so the group revenue is 437,928. Now, this number, are you getting this particular number? This is also a revenue, and the revenue was also there on that particular financial statement page, total revenue. How there can be two different revenues in that scenario? Are you getting the point? Here we are comparing the total revenue versus total revenue. How there can be two different total revenues? If you see, I'll just go back to the consolidated financial statement to show you. Yeah. So if you see, you have a consolidated revenue over here also. So consolidated revenue from operations is reported at multiple places in your annual report plus in your financial statement. If I search only this particular number 437927, this is reported at multiple places. So just because the revenue is quoted at multiple places in your annual report, all the revenue amount should be similar. It should not be the case, okay, 1 year it is 437, one place it is something XYZ, one place it is, some not 437. So here it is 437, somewhere else it is, let's say, 449, not 437. Here it is also 437. So, here it is, if you see somewhere else, here it is also 437 over here. So this is the other information I'm talking about, that it has to match which with your financial statement. Tomorrow, if this particular information, let's say it's not 437, let's say it is written 582 125 here, all-time revenue high, then as an auditor, when I will read the other information, my job is to identify this kind of inconsistency with the total revenue reported over there. My job is to understand why there is a difference or why there is an inconsistency between the other information which is given in your annual report versus the information in your financial statement. It should not happen that, okay, in financial statement, I am seeing revenue 4,000 crores, 5,000 crores, or in this case, 4 lakh 37,000 crore, and somewhere else I am saying, it is 5 lakh something else crores. Okay. Here I'm saying EBITDA of 62,000 crores, and somewhere else I'm saying EBITDA of 95,000 crores, and somewhere I'm reporting some other number. No, it should not be the case. That's why, as an auditor, it is your responsibility, one, to read the other information. Second, to identify the material inconsistency between the other information in the financial statement. Third, to understand the if there is any material inconsistency between the other information and auditor's knowledge. And if you identify any material inconsistency, then auditor is required to understand whether the other information is incorrect or your financial statement is incorrect. So first you understand the difference. Like, is there any material inconsistency? If yes, then understand what is the incorrect amount, whether other information or your financial statement, and accordingly, then you need to report or take consideration of the matter. Now, everywhere we are talking about material inconsistency. Remember that we are talking about material inconsistency. Material inconsistency that has to be between other information and financial statement, number one, other information and auditor's knowledge obtained in the audit. Okay. But if the inconsistency is not material, in that case, what you will do? Come on, guys. If in the case inconsistency is not material, then what you would do? Come on. There could be a scenario where, it is small difference, not a material difference. What you will do? Okay, Aaron. Ask management to rectify. Fine. Anyone else? Anyone? Like what you would do if the inconsistency is not material? No? Okay, I'll tell you. See, there could be a scenario where the inconsistency is not material. Okay, is not material. Now, here when I talk about the concept of materiality with respect to the misstatement or inconsistency, okay, now that materiality is has to be understood with respect to the judgment of the user. It is not only based on the amount. Okay, it is 1,000 crores of amount, very small amount compared to the 4 lakh crores of revenue. No, it is not like that. Sometimes you have to understand the concept of materiality beyond the numbers. Okay, so you need to understand what is the important and what is the factor that can influence the decision of the users of the financial statement. How much critical that information is. Based on that, I will decide whether that information is in material or not. If it is influence, if the information is of such nature that it is influencing the decisions of the user, and if the uncorrected information, if it is influencing the decisions of the user, yes, I will count that information as in material. Not all inconsistencies will influence the economic decision of the user. So accordingly, you need to understand whether that particular information is of such nature or not. And on a standalone basis, a particular information might not be a material information. But on a cumulative basis, let's say you have a 5 different, inconsistencies, which together make a material chunk. In that case, yes, it will become material. So a standalone basis might not be material. But on a cumulative basis, if you identify multiple such instances of inconsistencies, then that cumulative way you have to consider, and that will be your material inconsistency. Clear? Any doubt? So the concept of materiality with respect to inconsistency is totally dependent upon the influence, over the user, okay, with respect to their economic decision making. Sometimes your financial reporting framework may provide that kind of information. Okay, let's say the financial reporting framework is providing, okay, what is material. If the framework is providing that, okay, this is material, fine, no issues, that is material. However, if there is no applicable framework, or there is no particular information on the materiality of the other information with respect to your financial reporting framework, in that case you need to consider this, that whatever is influencing the decision of the user, that will be material. Okay. Now, coming to the next point is that, okay, we understood what is material inconsistency and what we need to do when it is inconsistency and material inconsistency. Okay. Now, let's say, for example, hypothetical example, you are, issuing your audit report. By that time, let's say you don't have the annual report ready with you. It happens that, annual report is not ready with you. What you will do? How will you read the other information? Anyone? How will you read the other information when the annual report is not ready with you? Come on. Am I audible? You're getting my voice?
Yes, sir.
Yeah.
So,
Okay.
full set of financial statement along with auditor's report are issued afterwards. So, auditor will tell management before making it public. Once take my opinion or approval. What kind of information are you going to supply along with my auditor report?
Yes, absolutely correct. So, in times when the information or the annual report is not ready, that information is not available. At that point in time, auditor has to make such arrangements with the management. Okay, management, tell me one thing. When you are going to prepare annual report, management will say, okay, once you'll give us the audit report, we will prepare the annual report after 2 weeks of that. Fine, no issues. Do one thing. Whenever you prepare the annual report, okay, share with me that annual report. Okay, and share the version with me, which is the final version before issuance, so that I can go through and I can check for the inconsistencies. If that is not available till the time of your audit report, so ask management to share with you before issuing the final version. Okay, and you need to take appropriate representation from management to that effect. Okay, management, provide me a representation that the final version of the documents will be provided to me when available prior to the issuance by the your management or by your company. Okay, so that I can complete my procedure. So that is first, give me that representation, and later point in time you do that. That is the thing the management is required to do. Okay, so the procedures that are required to be performed over other information are: number one, first you have to, let's say for example, if that information is available, okay, if that information is available, then you need to obtain on a timely manner. That's it. But if that is not available, you need to obtain at a later date. So first of all, determine with the management what is the time and the manner of issuance of such document. So how you will be issuing such documents. So understand the time and manner of issuance of the documents. Second, make arrangement with management to obtain in a timely manner. Let's say, for example, before issuance of the audit report only, you go and check with the management. Okay, management, when you are going to issue an annual report, we want to issue our audit report. So management told you that, okay, annual report is ready, draft is ready, you can take the draft. Okay, so you will go and ask management, okay, management, share with us the versions, the final versions of the documents, whatever you have prepared. Okay, and we will go through it and then we will issue the audit report. Sometimes that also happens. So you obtain in a timely manner. But let's say that document is not available, that the case we discussed. If the documents are not available, first obtain written representation. Obtain written representation that management will provide you the final version. Provide you the final version before issuance of that information. Okay, before or prior issuance of that information, so that you can complete the procedures. So you need to obtain that representation, and at the time of issuance, you have to obtain that information also. Clear? What procedures you are required to perform? Now, after obtaining either on a timely basis or after obtaining at a later stage, what you need to do is you need to read the other information. You have to read the other information to understand the inconsistencies between the other information and your financial statement. Can anyone tell me? Yes.
Yes, sir, I have a query. Sir,
Yeah.
can the other information can be in the BRSR report also?
Yes. If it is part of your annual return, yes, absolutely.
Yes, thank you.
Any queries till now? Any other question? Okay. As I specifically, said that we are required to read the other information. What do you mean by reading? Can anyone explain the term that, okay, reading the other information? You have an annual report here. Let's go to the annual report that we have. This one, this annual report. This annual report is almost 530 pages. Will you read the whole annual report? Or how much detailed reading you will perform? Is it something that you are required to do cross checking of each and every number? Are you required to audit each and every number? How much in-depth reading is required? Can anyone tell me quickly? 530 pages. Okay, in this example, what you will do? How will you read? What approach you will adopt? No, Sumit. That is something as of now not permissible. Come on, guys. How will you understand that? Okay, like, how much in detail you will go and you will check the amounts? Anyone?
So it would be the auditor's professional judgment about the amount or information that has been included in the other information, which is having reference to the financial statements.
Sorry, I was on mute. Yeah, okay, very good. Anyone else would like to add something? Anyone? No? Okay. So, required by statute, selective approach. Sumit, required by statute, basically sometimes it is not given, like, most of the cases it is not required by the statute or not given by the statute. In that case, we have to decide ourselves. Selective approach, yes, selective approach we need to follow, Jenny. Amounts or other items to compare is based on my professional judgment, number one. And how I will exercise the professional judgment is based on the importance of the amount. See, if there is an inconsistency in other expense reported somewhere and other expense reported in the financial statement, whether that other expense is the material inconsistency. Again, the concept of materiality will trigger. Difference in the revenue, yes, it will be a material inconsistency everywhere. The number of revenue I will verify. Whether other expense, other miscellaneous expense, will I verify? Answer is I might not, because of the significance of the amount or that other item that is presented. I might not choose to verify that. If in quantity or the size, relative size of the amount with respect to the other items is very small, I may not choose to check. I may perform sensitivity analysis also. Let's say, for example, increasing this item, how much impact is it coming on my P&L or my other things? Sensitivity analysis. Or for example, I may check, okay, this is a very sensitive transaction, related party transaction, share-based payments, sensitive topics, going concern, sensitive topics. I may choose that based on my professional judgment. In that case, I will exercise my professional judgment to understand the amounts. Are you getting the point? So based on my professional judgment, I will try to get the details. What is the material amount? And in that material amount, I will check for the inconsistency. Then can I say that once I verify about the inconsistency, those numbers are also audited? Will you say that? I verified the revenue. I verified the material numbers or other information. Can I say now those numbers are also audited? Or I am providing a kind of information on other information? I'm kind of providing an assurance on other information?
No.
Anyone else? Like, I'm verifying the revenue, which whatever is there in your financial, in your annual report. I'm kind of providing assurance on that revenue number. Is it so?
Auditor is just making sure that the information that is there in other financial information is in line with the financial information statement that have been audited. They convey the same meaning as they had been given in the financial statements.
Yes, very good. My purpose under this particular part is not to issue any assurance on other information. This should not be considered as an engagement to provide an assurance on other information. Not at all, no. My purpose as an auditor is to read the other information to understand the material inconsistencies. That's it. No assurance, nothing will be provided in other information. Okay. And for that, I will compare the other information to the financial statement. I will compare the other information to my audit's knowledge. Okay. And if there is a material inconsistency, I will go and investigate the difference. And I may perform a reconciliation, like, comparing the items between the financial statement and other information, checking the calculations, reconciliations, arithmetic accuracy, all that stuff. I may perform that. But in no way, in no sense, that should be counted as an assurance. Okay. Am I clear? Any doubt till now? And other information does not only mean financial information. Remember that. Other information can be any information which is given over here. Any information. For example, this is also about the products, like following the 3 years of supply constraint. This is also another information. Let's say, for example, here, hypothetical example I'm saying, here it is written there is a constraint due to semiconductor shortage, inflation, energy crisis, all that stuff. But when I did the audit, I got some other information. I got the some other understanding that there was no shortage on the semiconductor part. Hypothetical example, not saying on actual, but okay, hypothetical. Let's say when I did the audit, procurement team told me there is no issue with the semiconductors. So not only I will compare with the financial statement, but I will compare this information, which is non-financial, with your audit knowledge. Now, can anyone tell me why we are doing this? Why we are comparing with the audit knowledge? Financial information we can understand. That numbers cannot go wrong. Two different numbers cannot be there. But why with the audit knowledge? Anyone? Why with the audit knowledge?
So it may be like example, if I can give. During the course of audit, he may come across the knowledge about any specific managerial decision that has been taken, like for any merger, acquisition, or any arrangement. Whether that thing is been properly disclosed in the reports or not, and whether it is substantially different from what has been given to the auditors. Then it will also have to check whether that information is again having any substantial effect on my audit report also. That's why they have to take their information that auditor has got during the course of audit.
Absolutely correct. Very good. See this example over here about the demerger. So there is some information on the demerger. I, based on this information, will be able to identify, okay, is there any, major transaction happening, which whether that information was provided to me during the audit, because this information, if not provided to me during audit, if not shared, then my risk assessment is incorrect. Understand that if there is any demerger happening, or is there any, transaction which is important transaction which is not being disclosed to me. For example, here, this one, shortages. No one told me about shortages, so I was not aware. Now what happens is when the shortage happens, the raw material price goes up. You have to pay higher raw material prices. Now, no one told me, no one, disclosed this to me. Rather, what I saw is when I did the analytics, the raw material price were going down. So without this information, I was not having this information. So I could not correlate the data analytics outcome with this information, means my risk assessment is incomplete, is not appropriate. And hence, if such informations are not disclosed with us, then in that case, we might, end up doing wrong risk assessment, wrong auditing, incorrect auditing, or you can say, incomplete auditing. That's why we need to consider the other information with the audit knowledge also. Clear? Clear? Any doubt? why comparing other information is important with the audit knowledge? Okay, fine. Now, let's say, for example, you read the other information and there is an inconsistency that you identified. Okay, you will ask management, please correct it. What if the management refuses to correct? What you will do? Management says, okay, I will not correct this information, other information. I'm not going to correct because this is out of the purview of your audit. You are not required to comment on this. What you will do?
I would prefer communication with those charged with governance, and if possible, I can also look for the withdrawal of the engagement if it is allowed by the law or regulation.
Okay. Yes, very good. Absolutely correct. Yes. Anyone else with a different answer? Limitation on scope or audit. Okay, Sumit. Yes. So what? Yes.
Sir, your screen is not visible to me.
Not visible.
Now visible, sir.
Okay. Okay. So basically, what you will do when you identify material inconsistency, when material inconsistencies are identified. So first of all, you need to understand whether this material inconsistency is with the other information or with the financial statement or your audit knowledge. So you need to decide, or you need to understand the area of the material inconsistency. Okay. So first and prime and important thing is understand whether the material inconsistency is in other information or your financial statement or your audit knowledge. For time being, we will first focus on the other information. Let's say, okay, there could be two scenarios. If it is audit or FS, and if it is in the other information. Let's say if it is in the other information, you will ask management to correct. If corrected, perfectly fine, not an issue. If they agree to make the correction, just determine the corrections are made. Okay. If corrections made, then just verify the corrections. If corrections are not made, if management refuses to make those corrections, okay, management says we will not make those corrections, then communicate the matter to those charged with governance. First of all, that those charged with governance, management is not ready to correct this other information, which is incorrect, which is inconsistent with the financial statement. You have to correct that information. Okay. And let's say if still those charged with governance also does not, also not correct, or they also, do not, does not take any step or they are also, not replying to you. In that case, you need to consider the implications on your audit report. Okay. Consider the implications on your audit report, which may include, you need to identify that information. Consider implications on audit report. Basically, the implications are decided on the basis of the level of inconsistency. How much inconsistent the amount or the financial or non-financial information is. Okay. Let's say you may decide, okay, like, if that information is inconsistent, fine, but it is only related to one particular item. You may highlight that particular item in your audit report. Okay. You may highlight that particular information in your audit report. Perfectly fine. You can do that. That you can disclose that, okay, this is the inconsistent information, and that should be this should be the one correct one. Okay. But if the inconsistency of the information is of such nature that it is material and pervasive, like, it is, going beyond just the one number. It is beyond just one number or one financial information. Okay. In that case, you need to assess that whether issuing the audit opinion is correct or not. Okay. You need to consider that scenario that, okay, is it appropriate if I issue the opinion? Let's say management is saying the revenue increased with 50% this year, but your audit report or the financial statement that you audited shows that the decrease in 30% revenue. All numbers are different. All numbers. When you ask management told you that, okay, we have prepared the other information based on some other gap. In that case, you need to understand that, okay, you might take legal advice. You need to consider, is it appropriate to issue the audit report? And if you decide after taking the legal advice, okay, not appropriate to issue the audit report, you may decide to withdraw from engagement. If withdrawal is not possible, okay, then you need to obtain the legal advice, how to tackle that matter, how to report that matter in your audit report.
So, whether fraud will come into picture here, where the regulatory and legal requirement is posed on the auditor to report to central government regarding the amounts of the fraud.
See, at times it is a fraud or it is something different. See, it could be a difference of opinion also. It is not necessary that it is fraud. It is difference of opinion. It is something, beyond fraud. For example, I'll tell you one simple example. Management reported that, their revenue consolidated from all the operations, okay, including joint venture, including associates, or something which they were not supposed to consolidate. Let's say management in their other information has given the revenue with such entities which they were not supposed to consolidate. Now they are saying that, based on the framework or the contracts with those entities, or, some of their definitions, that these entities are also required to be consolidated for our purpose. But when you will prepare your when they will prepare the financial statement, they have to follow the Ind AS for consolidation and to determine what is the control. So in such scenarios, it becomes very difficult to, challenge the and say that, management is making a fraud.
Okay, sir.
But yes, if there is an actual scenario where there is a fraud, you can report. So it is about the intent of the management.
Clear, sir.
Anyone? Anyone, any other doubts? So what is the intent of management is something that you need to understand over here. Any doubts till now? Any doubts? Okay. Now, what if you identify this inconsistency after issuance of the audit report? So first example was where we get on a timely basis the information. Perfectly fine. We can do that. But what if where it was a representation from the management and now management is not ready to correct? What you will do?
Here also in this case, I will communicate with management, and that means communication with those charged with governance, and I will tell them to make an announcement to make that user's attention towards the fact that the other information is materially misstated.
Okay. But let's say management is not agreeing that, okay, we will not correct the other information. You have issued the audit report. What you will do? Audit report has been issued. Management is not ready. Those charges governance is not listing. What you will do?
Legal advice will say
Okay.
For understanding what legal action can auditor take.
Yes. Absolutely correct. Or you may issue a new or amended audit report. You may revise your audit report accordingly. So what will happen, I'll tell you. If that material inconsistency that is there, okay, is being identified after issuance of audit report. Now I will take another branch over here is if material inconsistency is identified after issuance of audit report, in that case, and this is scenario where management is not correcting, okay, they refuse to correct, and you have communicated the matter to those charged with governance, but still no response. So no response, you are getting no response from them also. Then in that case, number one, seek legal advice. If permissible to do, then amend or issue new audit report. Amend or issue new audit report. Okay. And let's say sometimes, we are not appointed by the management or shareholders or members, but we are appointed by some other regulatory authority. Okay. So some other authority has appointed us. In that case, in case where appointment is done by a regulatory authority, bring to their attention this information. Bring to their attention that there is a material inconsistency in management and those charges governance are not ready to rectify. Clear? Any doubt till now? Any doubt? Okay. Now, the next part that is very important that I want to discuss basically is when this information, when there is an inconsistency in audit and financial statement, what you will do. We were talking about other information. Now the other information is correct, but your audit knowledge or the financial statement is not correct. What you would do?
I would assess its impact on my audit opinion. Let's say if it is about my audit knowledge, like internal control or something, I will reassess my understanding about the entity and its environment, and accordingly, I would assess whether any further audit procedures are necessary to be performed for taking assurance that the audit evidence that have been obtained by me is sufficient and appropriate to give audit opinion on them.
Okay. Okay. Yes, very good. Anyone else would like to add something more to this? Anyone else? Okay. So when there is a material misstatement in the financial statement or on the auditor's understanding, first of all, you need to revise your auditor's understanding or the area which is there in the financial statement. Basically, what I will do is that I will first of all consider the impact of the misstatement. Now, see, revenue, let's say 5,000 crores somewhere written in my financial statement is 4,500. I missed out something, or management did not disclose to me. So consider the impact of that missed revenue, whether it was intentional, whether it was something, which was not intentional, but, somehow it got management did not provide you the correct information, or controls were not working. So you were not able to get the correct information. So you need to analyze why that happened, why there is a difference in the financial statement, why this particular misstatement was not identified earlier. So understand the nature of misstatement first of all. And rather it is a material misstatement. Okay. So understand the nature of that material misstatement. Then once you understand the nature of that material misstatement, you need to revise your risk assessment. So consider the impact of material misstatement on your risk assessment performed. And that is risk assessment as per which essay? Quickly.
Essay 315 or 330.
Yes, 315. Okay. And accordingly, you need to decide the additional procedures to be performed as per essay
330.
330. Very good. Okay. Now, furthermore, you need to evaluate the misstatement, material misstatement as we did in SA 450, that where we evaluate the material misstatement and what impact is has on your opinion, plus you need to evaluate as per 240 whether there is a fraud risk or not. So you need to evaluate material misstatement with respect to these angles also. Okay. Now there could be one scenario where you are identifying this misstatement after issuance of the audit report. So there is a misstatement in the financial statement when you read the other information, and that is after issuance of the audit report. How will you deal with that matter?
Sir, consider the impact of that information on my audit report generated, or according to SS 560 subsequent event.
Yes, very good. Absolutely correct. So I would consider that particular information for subsequent event. Like, if that particular information or misstatement is being identified after my issuance of audit report, if material misstatement, okay, is identified after issuance of audit report, then consider same as subsequent events. As per 560. Clear? So I have to treat that particular misstatement as I treated the subsequent events under SA 560. Any doubt till now? Any doubt? No? No doubt? Okay. I have a doubt. I have a question rather. Let's say, let's go hypothetical example, and you tell me how will you respond to this particular scenario then. Okay. So Mr. A, auditor of XYZ Limited, issued qualified opinion because of misstatement in inventory. Okay. The said misstatement was also present in other information. As an auditor, how would you deal with that information? Deal with this scenario. So they have auditor has issued an opinion, which is the qualified opinion, because of the misstatement in inventory. Now, because of that, whatever amount which is reported by the management is incorrect. You have qualified already your opinion. Now, again, that other information on the inventory is inconsistent with the financial statement because you have already issued a qualified opinion. That information is not correct. So let's say financial statement is reflecting, okay, let's say financial statement reflecting inventory rupees 550 crores. There is a overstatement due to valuation. Okay. Overstatement of inventory. And because of which there is a qualification. Let's say overstatement is by 150 crores. Now this 550 crores is also present in other information. What you will do? Are you getting the point? That 550 is also present in other information. What you would do? Come on, guys, quickly.
Sir, but material misstatement तो 150 करोड़ का है ना, 550 तो नॉर्मली उसने वैसे भी गलत ही रिपोर्ट कर रखा है ना, मतलब
Yes, 550 is already wrong. Yeah. So I would say there is a material inconsistency. Okay, of rupees 150 crores. So there is a material inconsistency of 150 crores and there is a material misstatement, and because of which I have already qualified this, qualified my opinion. Will I again qualify my opinion on basis of material inconsistency?
मैनेजमेंट को रिक्वेस्ट करेगा करेक्ट करने के लिए अदर इंफॉर्मेशन को पहले तो, क्योंकि वो उसमें 150 करोड़ का उसने मटेरियल इनकंसिस्टेंसी को इनकॉर्पोरेट नहीं किया। और अगर मैनेजमेंट रिफ्यूज कर देता है तो फिर हम डिस्चार्ज विद गवर्नेंस के से इस कोई एक्शन लेने के लिए कहेंगे। और अगर वो भी रिफ्यूज कर देते हैं या कुछ और ऐसा रिजल्ट निकलता है तो हम फिर हमारा या तो एंगेजमेंट विथड्रॉ कर लेंगे अगर पॉसिबल है तो, और अगर नहीं है तो कोई और लॉ एंड रेगुलेशन के अकॉर्डिंग जो एक्शन पॉसिबल है वो लेंगे।
Okay. See, first of all, in this particular scenario, management has not corrected their financial statement. So for sure they will not correct the other information also. So because management did not correct their financial statement, I have to qualify my opinion. I had to issue my qualified opinion by stating that the inventory is overstated by this particular amount. Now, when it comes to the other information, I have identified material inconsistency of 150 crores. Again, which is similar to what my qualified opinion is about. So the question comes is whether I am required to again qualify my audit report on this particular part also.
No, sir.
So where I will report this part?
Other information, para.
Yes, very good. So understand, there could be a scenario where your qualification is not only restricted to your financial statements, but your qualification somehow is also impacting your other information. In such a circumstance, when a qualified opinion is there, due to material misstatement in the financial statements, then you need to consider whether the other information is also materially misstated. If yes, the other information is also materially misstated, in such a scenario, it is, the auditor's responsibility to go and to report accordingly. Yes, okay, this is, like this information is already, materially misstated. There is a opinion, qualified opinion, and accordingly, we are also reporting in the other information paragraph. So I have to draft my other information paragraph in such a manner that I have to provide that there is a material misstatement in other information also. Are you getting the point?
Yes, sir.
But what if I issue disclaimer of opinion? If I issue disclaimer of opinion, how will I, draft the wordings of other information paragraph? Can anyone tell me? When you issue disclaimer of opinion, how will you draft the wordings of other information paragraph? What you will
Sir,
do?
what is the base for disclaimer opinion? If you say overstatement of inventory, then you have some documents to reach that that criteria की overstatement of inventory हुआ है. डिस्क्लेमर तो जब हमारे पास में कुछ एविडेंस ही नहीं है तो हम डिस्क्लेमर देते हैं, राइट? और परवेज
Yes, you are correct. When you don't have any evidence, you issue a disclaimer of opinion.
बट आप जब ओवर स्टेटमेंट ऑफ इन्वेंट्री की बात कर रहे हो तो कुछ ना कुछ फिजिकल काउंट हुआ होगा, जो हमने ऐसे 500 उसमें सीरीज में पढ़ा था कि इन्वेंट्री इज अ सब्जेक्टिव टू स्पेशल कंसिडरेशंस में आती है. तो कुछ ना कुछ उसके अकॉर्डिंग हमने प्रोसीजर फॉलो किया होगा, तो कुछ तो एविडेंस हमें मिले होंगे, राइट सर?
But I actually issue disclaimer of opinion when I don't have any information. Like, the information which is missing, the possible effects of the material misstatement could be material and pervasive both. Means the missing information was so much of crucial, or that, it was so much of important that it made the substantial portion of my financial statement. So I'm saying my missing information, because of which I have issued a disclaimer of opinion, is of such nature that it is making majority of my financial statements. In that case, how will you, deal with the other information?
आप ही बता दीजिए सर.
Anyone else? Anyone? Yeah.
ये इसी केस में एप्लीकेबल होगा या नहीं ये तो मुझे नहीं पता, बट आई वुड से इन जनरल ऑडिट रिपोर्ट में ऑडिटर को बताना पड़ता है कि अदर इंफॉर्मेशन से रिलेटेड का जो ऑडिट ओपिनियन इशू करना उसकी रिस्पॉन्सिबिलिटी नहीं है. द प्रिपरेशन एंड प्रेजेंटेशन ऑफ अदर इंफॉर्मेशन attached to the financial statements are of the management, and the auditor is in no point of time giving any audit opinion regarding the information that is given in the other information. और वो बस बताएगा कि ये अदर इंफॉर्मेशन दैट वाज appropriately given to the auditor or not. इतनी चीजें बताता है, इतना समझता है.
Okay, no issue. So let me tell you. And the answer of this lies back to our discussion on the disclaimer opinion that we did in our last session. Okay, I'll go back to that particular discussion. So we did a discussion on the disclaimer of opinion, and we said that, okay, when we have a disclaimer of opinion, okay, in that case, there are things which are not required. So if you have a disclaimer of opinion, then you should not add in your audit report. These are the things that you should not provide in your audit report. One was your 701 key audit matter paragraph, and second was your SA 720 paragraph that we discussed when we discussed about the disclaimer of opinion. Okay, so when you have a disclaimer opinion, you are actually not required to include other information paragraph and your key audit matter paragraphs. Because the reason lies is that when I am issuing disclaimer opinion, at that point in time, basically what I'm saying is I don't have the information available with me. I'm saying that, I don't have sufficient information. When you don't have a sufficient information available with you, then how can you verify or compare that information with the other information? You cannot. You will not be able to do that because you don't have the information available in your hand. Are you getting the point?
Yes, sir.
So when there is a disclaimer of opinion, do not add key audit matters. Do not add other information paragraph. These two
ऐसे 706 पे तो नहीं आएगा फिर?
Key
audit matter and other matter paragraph भी तो नहीं आएगा ऐसे 706 के according से?
No. In case of disclaimer of opinion, still there could be some scenarios where I can say I will add other matter paragraph, or you can say emphasis of matter paragraph. There can be some certain scenarios.
Okay.
See, what is emphasis of matter paragraph? What is emphasis of matter paragraph? Emphasis of matter paragraph basically is about, you are bringing something to someone's attention. See, this is the one disclaimer of opinion. This is the report that we discussed last time also. This is disclaimer of opinion. And with the disclaimer of opinion, you have emphasis of matter paragraph and other matter paragraph. So with disclaimer of opinion, you can have emphasis of matter paragraph, you can have other matter paragraph, but there should not be any other information. See, here auditor's responsibility, other legal regulatory requirement, but there is no other information paragraph here. Management responsibility, but no other information paragraph in this whole audit report. Not even a key audit matter. So in case of a disclaimer of opinion, key audit matters and other information, both are not required to be given. Otherwise, you are contradicting yourself. Clear with this? Any doubt? Any doubt till now? I hope you understood the point that how these paragraphs, how a particular standard is connected with another standard. So when I talk about reporting, reporting does not work in silos. It is not only one particular part, it covers multiple. Now, another area is, am I required to qualify my other information paragraph when there is a qualification in the audit report? So am I required to compulsory qualify my other information paragraph when there is a qualification in the audit report?
No sir, because in qualification के time में हम basis for qualified opinion में वो information already include कर देते थे.
Yes. Yes, but that is not the reason. That is what answer is correct, but the logic is something different. Anyone else? Okay. The logic lies is because qualification can be on other, different items. which might not be relevant from the other information point of view, but might be relevant from the financial statement point of view. Simple example. When you prepare consolidated financial statements, okay, you have a consolidated numbers. Let's say, for example, there was a qualification that the cash flow statement of a particular entity, which is a material entity, material component, was prepared incorrectly. There was a misstatement in that, and that was again, carry forwarded in your consolidated opinion. Now, because of that, you qualified your opinion, but the misstatement which was there in the cash flow is nowhere reflecting in your other information. Or for example, I'll show you one classic example over this. See, this is the basis of qualified opinion. So what is the qualification? We draw attention to the note this and this to the consolidated financial statement regarding non-consolidation of financial statement and other financial information of an overseas subsidiary, this particular, for the reasons stated in the notes. We are unable to comment on the impact of consolidated financial statement for the year, carrying values of assets and liabilities, retained earnings, and whatever it is. So there was non-consolidation, and because of which they are qualifying the opinion. Now let's go to other information. This is the other information paragraph, which is titled as other information other than the consolidated financial statement and audit report thereon. Now, what this paragraph says, the holding company's management, board of directors are responsible for other information. The other information comprises the information included in the director's report, management discussion, analysis, corporate governance, but does not include CFS and audit report thereon. Fine. This is explanation of the other information. What is other information? So kind of a definition of OI. Fine. Then opinion on the consolidated financial information does not cover other information and do not express any form of conclusion thereon. So what they are saying is there is no conclusion or therefore any form of assurance on the other information. Fine. In connection with our audit of the consolidated financial statement, our responsibility is to read other information. In doing so, consider whether the other information is materially inconsistent with the CFS or our knowledge obtained during the course of audit or otherwise appears to be materially misstated. If, based on the work performed, we conclude there is a material misstatement of other information, we are required to report that fact. We have nothing to report in this regard. So there is nothing to report over here, okay, because there was a non-consolidation. They have already stated that there's a non-consolidation, but whether that non-consolidation is impacting your other information, is creating a material inconsistency, answer is no. That's why your other information paragraph doesn't have any such issue. Now, if you see this particular line over here, that non-consolidation of financial information and other financial information. So they are already saying that they have not entered or they have not added other financial information about this particular entity. So there is no question on the material inconsistency. So there could be scenarios where you have a qualified opinion, but no issues with the other information over here. So over there, you had to say that we have nothing to report in this regard. Clear? Any doubt? So this was your essay 720 that we discussed in detail. This is your essay 720. Any doubt with the whole essay? Are you able to get the understanding of this particular standard? Auditor's responsibility related to other information. Okay. If no doubts, what I propose is let's take a quick 10-minute break. After the break, we'll continue the session. Okay, let's take a quick 10-minute. Yes, thank you. welcome back. Let's continue the session. So I hope you are clear with the SA 720 now in with much more clarity. Okay. Now we will delve into the SA 710, which is comparative information, corresponding figures, and comparative financial statements. Okay. So SA 710 talks about comparative information. Now, what is a comparative information? Can anyone tell me what do I mean by comparative information?
Previous year financial amounts.
Okay.
Yes. It could be previous quarter also.
Yes. Very good. Very good. So, anyone else, before I proceed, anyone else would like to add something more to this?
So previous reporting period, whatever it is, quarterly, yearly.
Yes. Yes. Now, very good. First of all, we need to understand there are two broad approaches when it comes to the comparative information. Now, comparative informations can be your corresponding figures. Okay. The comparative information, first of all, can be your corresponding figure. Or comparative information can be your comparative financial statements. Okay. Either it can be either anyone. Okay. Now, what is the difference between both? Basically, when I talk about comparative information, they are the amount and disclosures, not only amount, but the disclosures in financial statement with respect to not only the last period or any previous period, any previous quarter or year, but it could be more than one. Okay. So I am talking about it is the amount and disclosures. First of all, amount and disclosures, not only amount. Number two, that are included in your FS. That are included in your FS, which could be with respect to one or more periods. Like I'm not talking about only the last one. No, it could be one or more. With respect to one or more. And I'm specifically using the word period. I'm not using the quarter. I'm not using the year. It could be any period. It could be 6 months. It could be 9 months. Perfectly fine. Whatever it is. It could be, some other period. But I'm talking about one or more periods and which is in accordance with your financial reporting framework. Okay. Now, when I read this definition again and again, so I'm talking first amounts and disclosures, number one. Second thing, I'm talking about one or more period. Perfectly fine. Then I'm talking about your FS that are included in FS. Understand, this is very important. I'm not talking about other information. Tomorrow there is a comparative given in other information. Will I take that as a comparative information? Answer is no. I'm only talking about financial statement. That's it. And that is to accordance my financial reporting framework. If something is beyond my financial reporting framework, again, I will not take a comparative information. So this is the base definition for your comparative information. Okay. Now coming to corresponding figures. What is corresponding figures?
Current period figures. Current period figures only.
Okay, current period figures. Anyone else with a different answer? Anyone? What is corresponding figures?
Figures related to the same period of the previous year.
Okay. Yes. Okay, I'll tell you. So to classify any figure as a corresponding figure, there are few things that we need to understand. First is that it should be related to prior period. Now it is again, I will go back to my definition. It is first of all not only the amounts, although we are talking about figures, but it is not only the amount, it is amounts and other disclosures both. So amount and other disclosures, first of all, that we need to understand. Although I term as a figure, but this is including disclosures. Number two, that are related to the prior periods. Perfectly fine. Are of prior periods. Then the next is very important, that they are integral part of your current period financial statement. Integral part of your current period affairs. Okay. And are intended to be only read only. So this is integral part, but even though being an integral part, it is read only. Okay. So this is basically your corresponding figures. Like they are amount and other disclosures. They are of a prior period. They are integral part of your current period affairs, but they are only read only in relation or amounts and other disclosures related to the current period. So when you compare the current period figures, which is amounts and disclosures, they only serve as a read only numbers. So can anyone give me some examples of corresponding figures?
Interim financial reporting.
Okay, interim financial reporting. Okay, let me show you something and then you tell me whether what category of this is. We'll go to any financial scale, any annual report. Now tell me this particular one. This particular section over here is comparative financial statement or corresponding figure. I need with explanation. What do you call this one? This is a comparative financial statement or corresponding figure? This financial statement.
These are the corresponding figures of comparative financial statement.
Sorry?
These are the corresponding figures of comparative financial statement.
You cannot have both. You cannot have both. Like corresponding figures of comparative financial statement. No.
Sir, comparative FS.
Okay. See, this is first of all balance sheet. This is a financial statement. Okay. Understand, this is a financial statement we are talking about. In financial statement, you have this particular previous year numbers. You call it as a comparative financial statement or corresponding figures. So one answer was comparative financial statement. Comparative financial statement, Sumit. Okay. Mancha, comparative financial statements. Okay, very good. Anyone else? Okay, can someone tell me why do you give this previous year numbers over here in your financial statement? Where the requirement comes from?
So schedule
Index
3.
1.
Hmm?
Index 1.
Okay,
Schedule 3. Schedule 3 also required.
okay. Schedule 3, Index 1. So, any specific item that you have seen in Schedule 3 or Index 1, what they says? What they say with respect to numbers? Have you seen the requirement which is enumerated in Schedule 3? What they actually say? Or what is there in your Index 1?
The Index 1 says this comparative financial statement is a part of complete set of financial statement. So when an entity is presenting complete set of financial statement, it has to present this comparative figures of preceding year.
So they are talking about comparative. Are they talking about comparative financial statement? Or they are talking about only comparative period? Okay, I'll show you. I'll show you the exact wording which is there in the Schedule 3 also. Okay, because then only we'll be getting understanding of this particular topic. Now, what Schedule 3 says, I'll just show you exact wordings of the Schedule 3. This is your exact wordings from Schedule 3. Okay. The point number 6 is the one which is important for us. Now, what point number 6 says is, financial statement shall contain corresponding amounts for the immediately preceding reporting period. They talk about corresponding amounts. They never say comparative financial statement. Your Schedule 3 specifically talks about corresponding amounts. This is Schedule 3 Division 2. I have taken from the Schedule 3 Division 2. If you go to Schedule 3 Division 1, you will find the same thing. There will be no difference over there. But the question is, they are also talking about, like the part is, they are also talking about the corresponding numbers, corresponding amounts. If you want, if you can see similar point number 5 in Schedule 1 or Revision 1. It again talk about corresponding amounts. So in your financial statement, basically, whatever you are seeing is corresponding amounts because they are read only. Focus on this particular term, read only. Why do we provide the numbers in your financial statement? To compare with the current year numbers and to serve the purpose as a read only. Are you getting the point? Now, when I come to the definition of your comparative financial statement, so comparative financial statement basically are comparative information only. So they are the amounts and disclosures. They are the amounts and disclosures. Okay. Of prior period. That are included in your financial statement of current year. Okay. That are included in your financial statement of current period. Now, very important part. Okay. And if audited, are referred to the auditor's opinion. And if they are audited, then referred in auditor's opinion. Means if I issue opinion on previous year numbers and disclosures, by having those in my current period financial statement, in that case, that becomes comparative financial information. Are you getting the point? So, have you seen any such example where you are issuing opinion on the numbers of previous period? Why does someone do that? Why I will issue opinion on the previous period? Anyone? Basically, why I will issue opinion on previous period? Can anyone tell me?
So any misstatement in the comparative information?
Okay, any misstatement in the comparative information? Anyone else? Anyone else? Why I would, issue opinion? Okay, I'll tell you with example. No issues. I'll tell you with one good example. Different opinion. Not different, basically, but let me tell you. Because, this will give you a good understanding about that, okay, when we are issuing opinion on our previous year numbers. Wait a minute. Let me show you with example. Just give me a minute. I think it is taking time to open the file. Give me a minute. So, have you seen a document called RHP? Have you seen a document called RHP, DRHP? So, what happens in RHP or DRHP? Have you seen, the opinion that is issued in the RHP or DRHP, which is there? I'll show you that document itself. just don't focus on the name of the company. I'll just, this is the publicly available data and I'll show you.
सर 5 या रिक्वायरमेंट्स होती है उसके अंदर इंफॉर्मेशन देने की.
Yes. So in that you have a multiple years where you present comparative financial statement. Okay. So you have a comparative financial statements over there. Just give me 1 minute. I'll show you with an example. This is the comparative financial statement, restated balance sheet. Because auditor's opinion sometimes goes on these comparative numbers also. So if I search for, I'll show you the wordings of the opinion also. Wait. So that, opinion. Yeah. Not that one. I'll just modify it in the draft. Okay. Yeah. So there are different kind of reports issued by the auditor when it comes to the these kind of RHP or DRHPs are there, or prospectus is there. Okay. Over there, the opinion that is issued by the auditor is of multiple years. It's not limited to a single particular year. Okay. So in that case, what happens is, when the opinion is issued for the multiple years, at that point in time, that becomes your comparative financial statement. So it is, I think, somewhere there, but okay, I'll show you another example. But the balance sheet which I have seen, is covered by the auditor's opinion. And that particular balance sheet where you issue opinion on each of the balance sheet, that becomes your comparative financial information, but not the normal financial statement that you have. Because in a normal financial statement, that annual report, you do not issue opinion on the comparative, on the corresponding figures. Understand that. You do not issue opinion on the corresponding figures. As a result, that when an opinion is not there, it is only for the read-only purpose, that is the corresponding figures. But when an opinion is there for that particular information, and that is not only for the read-only purpose, that is has a specific use of that information or that amount and disclosures of previous period. In that case, it becomes your comparative financial, information, comparative financial statement.
In case only red herring prospectus में ही comparative financial statements पे हम
No,
लोग
not like that. No. So comparative financial statements can be in multiple, multiple places. So this is just one example. So wherever you are required to issue opinion on multiple financial years, or you combine multiple financial years together and you issue an opinion, in that case, it becomes comparative financial information. Now that is case to case basis for sure. But yes, if there is such scenarios, there are scenarios. So over there, it will become comparative financial statements.
Okay, sir.
Okay, see this one. Now over here, this is the independent auditor's examination report. Now, if you see, they are issuing the opinion, restated asset liability at 24 June, June 23, March 24, March 23, March 22. So multiple periods are covered by the opinion. It is not just the one particular period, multiple periods. We will come back on this particular part here, restated financial information. We will come back when we will see, SA 800 series. We will see something more on that. But as of now, understand here, whatever restated financial statements are there, it's a comparative financial statements. Clear? So what is your comparative financial statement versus what is your corresponding figures? I hope you are clear with that.
Clear,
Yes or
sir.
no? Okay. Good. Now, why we are understanding the difference? The difference because is based on, see, if I say that on a particular item, I'm going to perform some procedures. Okay. If on a particular item, I'm required to issue opinion, then I have to perform procedures for sure. If on a particular item, I'm not going to issue an opinion, it is only for the read-only purpose, my procedures will differ. That's why it is very important for me to identify what is the category of that comparative information. Okay. Now, the objective of the auditor here is to obtain sufficient and appropriate information, sufficient and appropriate audit evidence regarding the comparative information, which could be both, okay, in the financial statement, and whether they are in all material respect in accordance with your financial reporting framework. Now, what audit procedures is auditor required to perform? Can anyone tell me some examples? What audit procedures the auditor is required to perform? Let's talk about first with your, let's say, the basic audit procedures for your comparative information for both of the categories. So I'm not distinguishing. So common audit procedures. Common audit procedures for comparative information. Can anyone tell me what audit procedures should be followed?
Sir, check the account balances and information, मतलब जो account name of the account is properly account for the next year, and policies, accounting policies are consistently applied in the current period and the previous year.
Yes, very good. Very good. Anything else? Yes, Mancha, accounting policies. Very good. So first one is simple. I will check numbers and disclosures with respect to prior period. So if it, let's say it is comparative information, financial statement or corresponding figures, they are pertaining to prior periods. So there is some base available in the prior period. So first of all, I will verify that information from the prior periods. So whether I will compare that whether that information, that comparative information agrees to amount and disclosures in prior period or of prior period, whatever it is. Okay. So do they agree with the amount and disclosures in prior period? Number one. Number two, for accounting policies, okay, I will see whether the accounting policies are consistently applied or not. Applied in the current period. And if you see this particular part, can someone recall or can some tell me where we have also dealt with this particular part?
Presentation and disclosure, I guess internal control side. Into present P&D का part था sir ये.
So these 2 points we have already earlier also discussed in some other topic. We have already discussed this particular point in some other topic. Anyone? Uh, 580, not really 580. I would not say 580. Yes, anyone?
ऐसे 560 subsequent events?
No, as of now, no.
No.
We will come to 560. There is another point for 560, not this one. Where do you check previous year information, guys? Pretty straightforward. Trust me. Where we have discussed this particular point.
सर आप पूछते हो ना उसी वक्त दिमाग से निकल जाता.
So opening balances, responsibility.
Yes, opening balances, SA 510. Initial audit engagement opening balances.
Yes, sir.
So this is something, remember something similar we have already discussed in initial engagement. So these are the same procedures. You will be performing these procedures any which ways if you are using, if it is the initial opening engagement, like if you are auditing for the first time. If you are not, then you will just agree the numbers with the previous year. Okay. If you are not auditing for the first time, just you will agree the numbers like carry forward and brought forward. And any which ways over there also we at least basically check that whether is there any change in the accounting policy. If yes, then whether the impact of the change has been disclosed or not. So irrespective whether it is first time audit or recurring audit, these two procedures are by default performed as per 510. So if there is a change, whether the change has been or whether the change is appropriately disclosed. Basic thing, SA 510. I'm nothing repeating something else. Okay. Now we will delve into specifics of the corresponding figure and the comparative financial statement, because this is the basic procedure. We also see this procedure as per SA 510. Basic procedure similar to SA 510. Okay. Now let's go to the specifics. We will talk about corresponding figures. And we will talk about the specifics of the corresponding figures first. Now, as we discussed, these are the read-only numbers. These are the read-only figures and amounts and disclosures. So the first requirement is auditor's opinion should not refer to these numbers. Should not refer to corresponding figures. Okay. First and prime important, I will write CF, corresponding figures, as of now. Okay. So auditor's opinion should not refer to corresponding figures. Now, this is a general scenario, general case scenario, but there is an exception to this. There is a very big exception to this. Can anyone tell me this exception? We have already seen this kind of exception earlier also.
सर ऑडिट ही नहीं हुई होगी फर्स्ट वाले स्टेटमेंट की तो.
Again, like I'm not required to issue opinion on that. It is not part of my engagement.
In
Why
case
would
of
I do?
material misstatement भी sir, this is not your part, right?
No, again, that's why I'm saying exception is there. Usually the general rule is I will not refer to corresponding figures in my opinion, but there is exception to this general rule.
This is
A
exception
specific
material misstatement.
material
This is
state
one of the exception is material misstatement.
in material misstatement in which number?
Opening figures.
Yes, something we similar we have seen in the 510. So when you have a material misstatement which is unresolved, in previous period, there was a qualified disclaimer or adverse opinion which gave rise to the modification and is unresolved. In that case, you can refer to corresponding figures in your opinion, because it will impact my current, like it is unresolved. So it is going to impact my current year figures by default. We have seen in 510. So if there is a material misstatement, is material misstatement in prior period figures and disclosures, okay, that is giving rise to qualified adverse and or you can say disclaimer of opinion in prior period, which is unresolved. I'm talking about still unresolved, which is unresolved. Very important part. If it was resolved, then why would I, qualify in my current year? I'm qualifying in the current year because the modification is still unresolved. Hence, in that particular case, auditor shall modify his opinion in the current period. Okay, auditor is required to modify his opinion in the current period financial statement, where he has to refer both current period figures and corresponding figures. So what he needs to refer both, that is corresponding figures and current period figures. Okay, then he has to provide a description of that particular matter giving rise to the modification. Okay, and the effect or possible effect on current period figures. So these three things: refer both current period corresponding figures and the effect and the possible effect of that modification on your current period figures. That is material. So this has to be material. That's why I'm referring over here. Otherwise, why would I refer? Okay. There could be another scenario where I can have a modification in my audit report, so that let's say for example, where I can say, okay, because there is an issue on the comparability, I'm just providing my modification. So let's say it is not impacting your current period figures, but it is impacting your comparability. So there could be one of the scenarios or very rare case scenarios where it is not impacting your current period figure, but it is impacting your comparability of the current period figures and corresponding figures. So when it is impacting your comparability, when the unresolved modification is impacting comparability of current period figures and corresponding figures, then you need to specify the same in your opinion. Specify same in opinion. Simple. Clear with this? So exception to the general rule where I cannot refer to the corresponding figures on my opinion. Yes or no? Clear? Okay. So if there is a misstatement in previous period, the first thing I need to do is to understand whether that has been resolved or not. If not resolved, then I need to consider the impact of that. Okay. Now, what if in the previous period there was a unmodified opinion, but there was a material misstatement that you identified? Okay, so there was an unmodified opinion, and as of now we are talking about modification in the previous period. What we are talking about modification in the previous period. But what if the previous period opinion was unmodified and there is a material misstatement? What would you do?
Modify in the current period, sir.
Okay. Anyone else? What you would do? So I'm talking about previous year. There was basically, you can say, it was unmodified. There was no observation there in the previous period. Okay, I'll tell you. If previous period audit report is unmodified opinion and material misstatement is identified in, let's say, corresponding figures. Okay, so material misstatement is identified in the corresponding figures and there was a unmodified opinion. So the requirement for the auditor is to first validate how this material misstatement was dealt in prior period. So let's say, for example, sometimes it may happen that it is it was not considered material at that point in time, but you are considering material now. So there was a professional judgment involved and it was not considered material. Now you are considering material. So has the materiality level changed? Because when you will compare the number, you will compare with the current period. Like when you have the materiality levels, you have a restated materiality levels with respect to the current period figures. So you need to see how this particular material misstatement was dealt in the previous period. And if unresolved, if still unresolved, you may issue whatever opinion you want to issue on the current period. So it can be adverse opinion, it can be qualified opinion, and it can be disclaimer of opinion based on your qualification or misstatement, whichever whatever is there. If unresolved, your current year will be modified opinion. Current year opinion is modified plus corresponding figures is also modified. So you issue modified opinion on your corresponding figures. Means again an exception to the general rule that where we are not required to comment on the corresponding figures, but we have to do this because there is a modification or there is a misstatement which is not dealt with appropriately. Clear with this?
Yes, sir.
Okay. Now, there is one question that should be there. Sir, what if the previous year financial statements are not audited? This is the first time audit. What to be done? Anyone?
Sir, as you said, this is not in my scope.
No, but how will you then report on that particular part?
Sir, I'll get the evidence for the appropriate amount or appropriate disclosure for the previous years. It should be appropriate, then I'll do my further audit procedure, which for the current year period.
Yes, yes. See, when it is the first time audit, okay, by default, 510 will trigger. I have to perform procedure as per the 510 to check the initial balance, correct? Opening balances. So 510 requirement will still be there. I will be complying with the 510, but as I said, I'm not issuing an opinion on previous year numbers. So I will just say that the previous year previous year finance period prior period financial statements are not audited. So somewhere I have to issue that kind of statement that prior period financial statements are not audited. So where I will issue that statement? Which paragraph?
In other matter paragraph.
Why not emphasis of matter? Why other matter?
Because sir, it is related to my audit, na?
Yes, absolutely correct. Absolutely correct. Because it is related to the auditor's responsibility and audit opinion. It is not somewhere enumerated in your financial statement. Okay, previous year figures are not audited by any auditor or something like that. They will never mention in the financial statement. It is about the audit and auditor's responsibility. That's why I'm using the other matter paragraph. And I'm specifying that, okay, this particular part is not audited. This is the audit happening for the first time. Are you getting the point? Why other matter paragraph? So other matter paragraph will help, will provide this kind of information that, okay, this is being audited for the first time. When scenario is when prior period corresponding figures are not audited. So the first thing will be comply with your SA 510. By default, you have to comply with SA 510. And the next thing will be state in other matter paragraph this fact that prior period corresponding figures or numbers, amounts, and disclosures are not audited. Clear with this? Any doubt till now? Any doubt? Okay. If no doubt, then what if they are audited by some other auditor? Am I still required to report this particular fact? That they are audited by some other auditor, not by, me, or I was not the auditor in previous period. Am I required to report on that particular part? Anyone?
Yes, sir. The auditor should report in his audit report.
Okay. The auditor should report in his audit report that he was not the auditor. Okay. Where will I report? Where will I report?
Other matter para, sir.
Other matter paragraph? Okay, very good. So yes, in other matter paragraph, this particular point is reported that previous year auditor was someone else. I'll show you one example of this kind of scenario where this particular, thing is reported. So in other matter paragraphs, I'll show you how this particular kind of thing is reported. So let's say, for example, if it is, no auditor, then it will be reported like there is a no auditor. But in this case, there was a other auditor. So see, this is how it is being reported. Again, do not focus on the name of company. It is quite a bit old audit report, but again, it has a relevant thing, particular reporting thing. So see, the financial statement of the company for the year ended this included in the standalone financial statement have been audited by the predecessor auditor who expressed an unmodified opinion on those statements on this particular date. Our report is not modified in respect of the above matter. So there are two things. Number one, they are identifying the period. They are identifying the date of opinion. And they are identifying the type of opinion. Okay. So there are three things which are identified in the other matter paragraph. One, period. Second, date of opinion. Third, type of opinion. Based on this, we can understand that, okay, these are the things that are at minimum required to be disclosed. Again, what our essay says is that when there is a prior period financial statement audited by some other auditor or predecessor auditor, specify that in other matter paragraph, specify the financial statement prior period, identify the prior period were audited by predecessor auditor, specify what was the opinion, modified or unmodified. If modified, then the reason with the modification and the date of report. So that is the requirement of your asset 710 with respect to the prior period. Corresponding figures. So when prior period corresponding figures are audited by predecessor auditor, in that case, specify that in other matter paragraph with period, your opinion type, and date of opinion. So these are the things at minimum that are required to be mentioned in other matter paragraph. Yes, Mancha. Very good. Clear with this? So by this way, we can, understand like, okay, how the other matter is also disclosed with respect to asset 710. So till now, we were seeing other matters with SA 600. We have seen SA 600 in other matter paragraph. Now this is SA 710 and other matter. Clear with this? Okay. Now that was your details about corresponding figures. That we have discussed now, whatever we have discussed now was corresponding figures. Now we will jump on to your comparative financial statements. Comparative financial statements. Okay, we will understand what is the auditor's requirement with respect to the comparative financial statement. Now, again, first and foremost thing that we need to understand is here the opinion is a part of the overall auditor's responsibility, because when comparative financial statements are presented, the auditor's opinion shall refer to each period of that financial statement. So by default, opinion will be there on comparative financial statement. I'll call CFS for this particular topic. Okay. Or let's say, to avoid confusion, I'll say COFS. So auditor's opinion should refer to each prior period financial statement, each period of FS, including comparative financial statements. Now here, see, we are again issuing an opinion on the financial statements where there was an opinion. Unlike corresponding figures where there was no opinion, here we are again issuing an opinion. Now there could be multiple scenarios. You have a different opinion. So there could be a scenario where there is a different opinion. So if prior opinion differs with your current opinion, if prior opinion differs with respect to current opinion, then provide the reason for difference. Okay, you need to state that why there was a difference in, again, very important, other matter paragraph. You need to state over there why there was a difference, substantive reasons for the different opinion in other matter paragraph. See, you are qualifying, your basis of qualification, modification will be there in that particular paragraph. That is the basis of modified opinion. It could be basis of, qualified opinion, basis of adverse, or whatever it is. But why in previous period that there was another opinion, you need to state that in other matter paragraph. Again, you need to state the same, that prior period financial statement were audited by the predecessor auditor. Okay, so you need to specify the same thing, that when prior period financial statements are there, which is audited by a predecessor auditor, specify these same things again. Instead of, I will say CF, it will be now COFS. Okay, so for comparative financial statement, again, you need to specify that. Now, there is one particular area where, auditor changes the prior period financial statement. Now, let's say you identified a particular issue or material misstatement. You reported that material misstatement to the predecessor auditor, and predecessor auditor agreed to amend or issue new audit report. Predecessor auditor agreed to amend or issue new audit report. Then what you will do? Where predecessor auditor is issuing just a minute. I need to insert some new pages. Then okay. Where the predecessor auditor is issuing new audit report on account of unresolved material misstatement. So there was an unresolved material misstatement, and now the predecessor auditor is ready to issue new report. What you will do? Yes, Mancha, very good. Will you issue an opinion again?
No, sir.
It will be kind of a duplication of work. See, here we said that, okay, the general rule is auditor opinion should refer to each period of financial statement, including COFS. But I would mark this as an, here, conditions apply, exception, and this is that exception. Where predecessor auditor is issuing new audit report on the account of unresolved material misstatement, then only issue opinion on current FS. That's it. No need to issue opinion on prior period, because a new opinion is being issued by that auditor. Simple. And again, when the prior period CF are not audited, it is same also applicable for your comparative financial statement also. So applicable to COFS also in similar way. Okay. So this was your SA 710, basically dealing with your corresponding figures and your comparative financial statements. Plus, the important part was the difference between both of them. Any doubt till now with respect to your SA 710? Any doubt? Yes, no? So you guys are clear with this one?
सर अगर सेम प्रीडिसेसर और करंट ऑडिटर सेम है तो तब भी अदर मैटर पैराग्राफ में लिखना जरूरी है?
No, in that case you are not required to specify another matter paragraph because there is nothing to specify. Like you were the same in the previous year, then only, to the extent you need to verify the opening balances, and the accounting policies are consistently applied and they are carried forward appropriately. That's it.
सर और वन मोर थिंग सर, जब जब भी चेंज होगा तभी हमें ये अदर मैटर पैराग्राफ में डालना है, राइट? कि चेंज हो गया ऑडिटर.
Yes.
ओके
So
सर.
if you have a change in auditor, you need to specify that the prior period opinion was issued by some other auditor, not by you.
ओके सर.
Any further doubts? Any doubts, guys? No?
सर एक डाउट है जो कि मॉड्यूल के अंदर है. हम
Yes.
जब रीड कर रहे थे कि इसको, तो हमें एक नोट्स के और इसमें डिफरेंस का लेके एक पैराग्राफ था. वो आप नेक्स्ट क्लास में कवर करेंगे या फिर आपने ऑलरेडी कवर कर लिया? बिकॉज हो सकता है मैंने छोड़ दिया हो वो
Can you
पॉइंट
tell
ना.
me the page number or the point number which is there?
सर एक मिनट, मैं मॉड्यूल ओपन करके चेक करती हूँ नंबर.
No issue. Meanwhile, if anyone else has some other queries or doubt, they can ask. See, please utilize this option. Ask your doubts as much as you can because this will enhance your understanding about the topic. Okay.
सर 7.46 पेज नंबर.
7.46, just a minute. Yes.
और सर इसमें जो ब्रैकेट में नीचे लिखा है, वेयर द कंपनी हैज कमिटेड एन इरेगुलरिटी रिजल्टिंग इन द ब्रेच ऑफ लॉ. सर ये पैराग्राफ आप मुझे फिर से समझा देंगे अगर आपने कवर कर लिया है तो, क्योंकि
No. I'll explain. Don't worry on that. Okay. See, now what this paragraph talks about, there is a distinction between notes on accounts and qualifications. Okay. Why we have this particular point over here? The reason because here it is, when we talk about emphasis of matter paragraph, we are talking about something to bring the attention of the reader on a particular point. We are not modifying our opinion. So it shouldn't be happening that we are expressing a qualification, but in an ambiguous manner, that it is appearing like we are bringing the attention, because there is a thin line difference between bringing attention of the user to a particular matter and qualifying the matter. Now, for example, when there is a breach of law, when there is a non-compliance, I have to bring the attention of the user to that particular point by qualifying my report, not by placing an EOM paragraph. Okay. So if I say that, okay, this is the particular point, this is the particular qualification, and if I use, let's say management has disclosed appropriately a particular breach of law, irregularity, but the same, let's say in a lot of situations, I'm required to, comment on whether the company has complied with the provisions of Companies Act or SEBI regulations or something like that. Over there, if there is a non-compliance, so in that case, I need to specify there is a non-compliance. That cannot be a part, that cannot be, my EUM paragraph matter. That, okay, I'm bringing attention of the readers that there is a non-compliance. No, it is the qualification rather than your EUM paragraph disclosure. So that distinction should be understood between both of them. Now this particular page, if you see this particular box over here, okay, the term except for, whenever we have seen the audit report for the qualified opinion, they use the term except for. I'll show you with an example. Wait. Yeah. If you see this particular part, this is a qualified opinion. Yeah. This is a qualified opinion, and the term which is used is except for the possible effects of the matter. They are not using any ambiguous term, which is like, like this examples are given with the foregoing explanation or subject to. They are not using these kind of terms or phrases in your opinion or in their opinion. So I can, reword my opinion. I can say, like, okay, let's say, for example, I'll go back to that audit report and just a minute. Okay. How this would sound, this particular would sound if I write in our opinion and best to our information and according to the explanation given to us. Instead of this, I place like along with foregoing explanations, okay, described in the basis of qualified opinion, paragraph, the aforesaid financial statement gave true and fair view. Like if I change except for the possible effect of the matters with this along with the foregoing explanation or something with this, subject to the matters described in the basis of qualified opinion paragraph. Now the term subject to along with foregoing explanation is not correct, because your opinion is not, when I say subject to, it is conditional. Like subject to, if these are fulfilled, then my opinion is fine. No, it is not a conditional opinion. Or any other paragraph or any other terminology that you will use will not give the exact meaning which should give except for. Because I am saying that true and fair view except for these items. These items do not depict true and fair view. So that is the thing which is enumerated in this box, that they say that using the term with foregoing explanation or subject to is not sufficient. It's not appropriate. Appropriate would be to use except for. I hope it is clear now.
क्लियर सर, बट ये टॉपिक जो उन्होंने ऊपर दिया है वो दिया था नोट्स एंड क्वालिफिकेशन का डिफरेंस, राइट? उसमें इस बॉक्स को देने का जो सेंस था वो समझ में नहीं आया कि इसको क्यों दिया यहाँ पे। मतलब जनरली वो एक एग्जाम्पल नीचे देते हैं कि हाँ इससे ये चीज समझ में आ जाए। इसमें तो सिर्फ ओनली ये था कि आपको नोट्स में नहीं देना है, क्वालिफिकेशन इज डिफरेंट है, नोट्स डिफरेंट है, आपको क्वालिफाइड मैटर को क्वालिफाइड ही बताना है, वो सब चीजें ऊपर एक्सप्लेन करी गई है।
Basically, they have like in the study material, it is provided to gain further understanding of the qualifications. Like how, because what happens is when you say subject to, when you say with foregoing explanations, it loses the impact of the qualification and it becomes like a disclosure which you already gave in emphasis of matter paragraph. So
Okay,
it
sir,
changes
got
its
it.
colors from the qualification to the matter which requires attention. There's a difference between both.
Okay, sir, got it.
Any other doubts? Any doubt, guys? No? All clear? Okay, so your task will be to complete the reading of chapter number 7. In the next lecture, we will pick up the topic of Companies Act, the provisions of Companies Act. And you have to make sure that you complete the reading of chapter number 7 with all the doubts. If you have, you accumulate all the doubts and request, humble request to everyone that please read and practice as much as you can, because reading is one thing, practicing questions is another thing, writing answers with practicing question is another thing. So do practice, questions are there, use those questions, try to solve, because till now I have not seen a single doubt, sir, I have written this answer, but in module it is given, or in suggested it is given in this answer. What is the correct way to write? Should I include this particular part in my answer? No one has brought any questions on the answer writing part as of now. So topic understanding is one part. Writing answers is another part. Please practice that also. Okay. So if no further doubts, thank you guys. Thank you for participating in today's session. I will see you in the next session. Thank you.
Thank you, sir.
Yes, yes.
Please upload the notes related to 5 and
It is
6.
already there. Like you are not able to see still.
No, sir.
Let me check. Let me
And
check.
questions also.
Questions are already, see, questions, these questions are already there in your study material. The question that we practice in class are
Yes.
uploaded with the notes
Okay, but notes are not.
appearing. Let me check once why the notes are not appearing. Okay.
Yes, sir.
Yeah.
Thank you, sir.
Thank you. Thank you, everyone.
Thank you, sir.
Yes.